Hi friends, welcome to my channel. Today we are going to review a portfolio of Mr. Surya. So this particular portfolio is very much interesting. He is investing 2,08,000 SIP per month, which is huge, which is commendable. I don't think so many people are able to do this. So now look at. So he is currently of 44 years of age. He started investing in 2019. He has already gathered 47 lakhs of corpus. Uh, he is currently investing in Kotak Emerging Equity Fund, 24,000 monthly SIP, Motilal Oswal Mid Cap, 25,000, SBI Small Cap 4,000, Canara Small Cap 25,000 per month, Parag Parag Conservative Fund 10,000 monthly SIP, Nippon Nifty Alpha Low Volume 30 monthly SIP, Mira Asset Nifty Small Cap 250 Momentum 100 to 25,000 monthly SIP, Tata Nifty 200 Alpha 30 Index 25,000 monthly, Tata Nifty Mid Cap 150 Momentum 50 Index 25,000 monthly SIP. Total monthly SIP is 2,08,000. So this is he is currently investing in 9 different mutual funds across the market caps, including a debt fund also, basically hybrid fund also, and he is also investing in provident fund and national pension scheme. So look at the investment. He is currently investing in 2 large cap fund, 3 small cap fund, 1 hybrid, 1 mid cap. There are total 9 funds. Total SIP 2,08,000. Investment horizon is 15 years. So it's a good AMC diversification. There are only two funds of Tata. Otherwise, all funds are from different AMCs. Now, look at the detailed analysis of his portfolio. He's through Kotak Emerging Equity Fund. There is a 34%. It's large cap allocation, 64% it's allocating in mid cap stock, and 2% in small cap. Motilal Oswal mid cap fund is investing 79% in equity plus 21% in debt, cash, etc. So out of that 79% of its portfolio, it's investing 54% in large cap, 44 in mid cap, 2% in small cap, rest 21% in debt, in cash and cash related vehicles. Then is SBI small cap, that is investing 93.14% in equity plus 6.86% in debt, cash, etc. So out of that 93.14%, 61.05% it's currently allocating in mid cap, 38.95% in small cap, rest 6.86% in debt. In Canara Robeco small cap fund, 96% is allocated in equity, rest 4% in debt and cash. So out of that 96%, 15% in large cap, 58% in mid cap, and 27% in small cap. Now he's through Parag Parag Conservative Hybrid Fund, which is investing 15% in equity, 85% in debt, set 15% in 62% in large cap, 31% in mid cap, and 77% in small cap. And Nippon Nifty Alpha Low Volume, 97% in large and 3% in mid cap. Mira Asset Nifty 250 Momentum Small Cap is investing 89% in mid cap and 11% in small cap. Tata Nifty Mid Cap 150 is currently investing 71% in large cap, 29% in mid cap. Tata Nifty 200 Alpha 30 is currently investing 91% in large cap and 9% in mid cap. There is no small cap and debt allocation in Tata Nifty 200 Alpha 30 index fund. So what we can observe that Mr. Surya has been investing in too many funds, and he has started investing lately in so many funds. Those probably the NFOs when he has started. So now total allocation according to the market cap. So total 2,08,000 SIP is being invested like this. 1,10,355 rupees are per month are investing in large cap stocks. 65,081 rupees currently investing every month in mid cap stocks. 16,166, which is 7.77% investing in small cap, and then debt and cash there is 16,397. So 53% in large cap, 31.28% approximately in mid cap, 7.77% in small cap, and then others, which is a combination of debt and cash related instruments, so 7.88% in that segment. So basically, what we can see, there is a good amount of large cap allocation, which is quite good. There is a mid cap allocation also. So this is our observation. There are four relatively newer funds. There is no flexi cap, no multi cap, and the defensive hybrid fund currently is investing, which I don't think it is purposeful, because there are 15 years of investment horizon. So I would suggest, if you want to take your exposure in debt related instruments, it's better to invest in multi asset allocator fund. So that will expose you to the commodities like gold and silver, and apart from that, there is a good amount of debt portion with a substantial amount of large cap stocks also. So I would suggest you to add one multi asset allocator. Now coming to our suggestions, so we would like you to add one flexi cap fund, either Nippon India or HDFC. We could have suggested Parak flexi cap also, but it is now we are not suggesting, because AUM is already too much high. We would like you to exit Tata Midcap 150 fund, Tata Nifty 200 Alpha 30 Index fund, and Parak defensive hybrid fund. Add one multi cap fund. One multi asset fund can also be added. So basically, in mid cap segment, you are already investing in two active and one passive mid cap. So mid cap segment only has 150 stocks. So I think that will be properly covered by two active mid cap funds. There is no need of one more additional mid cap fund. So that is why we would like to exclude the Tata mid cap 150 fund. The second one is Tata Nifty 200 Alpha 30 Index fund, which I feel is a very much concentrated fund, which will be investing only in 30 stocks. So I think you can there is no point of investing in those 30 stocks. Those 30 stocks of which are generally a blue chip companies, they can easily be tracked and they can directly be invested through your demat account as well. Then there is no point of investing in defensive hybrid fund that has only 15% allocation of in equity. You have 15 years of horizon, so it is better to invest your money in those areas where you will be able to generate good potential returns. Flexi cap funds, on the other hand, we would like to add, because they provide a better flexibility to the fund manager. So if a fund manager wants, he can put 100% in the large cap. If he wants to put in the mid cap, he can put 100% in the mid cap. So this is how the flexi cap fund works. On the other hand, the multi cap fund, though may sound similar to that of flexi cap fund, but they have a different investment strategy. They have a different investment philosophy. In multi cap fund, there is a mandate of 25% along the different caps of the market, like 25% large, small, and mid cap. So that will provide a better diversification to you. So add one flexi cap fund and add one multi cap fund. So now the suggested portfolio would be Kotak Emerging Equity is fine, Motilal Oswal mid cap, Canara Robeco small cap, all are fine. SBI small cap fund is also fine. Mira Asset Nifty 250 small cap is also fine, because there is a huge pool of small cap funds. So one index fund, which is 250 small cap fund, and then other two active funds would be quite good, because there are so many stocks to choose. Then one flexi cap fund, 30,000 rupees, then one multi cap fund, 30,000 rupees, and then there is a ICICI multi asset allocator fund that you can allocate for 24,000 per month SIP. So that will allow you to invest in gold, invest in debt at the same time. At sometimes it will also allocate its money in the real sector. So you will get a proper exposure of different kind of segments, along with a huge 49% of equity allocation. So I think multi-asset allocator would be a better choice than the Parak Defense Hybrid Fund. So this is how the multi-cap and flexi-cap fund will allow you to have a proper exposure through the different caps of the market, like large cap, mid cap, and small cap. At the same time, they are protective also. So they will protect your portfolio also, especially the Parak flexi cap. If you choose Nippon India flexi cap or even HDFC flexi cap fund, they are quite good, and they have a very good protective mechanism, because they generally there is a flexibility to the fund manager, so he can invest any of the market segment which looks good at that point of time, which good looks lucrative at that point of time. So Motilal Oswal mid cap is fine, and in the small cap you can add, you can have one index fund also, that is additional. You can have it, Mira Asset Nifty 250 small cap. You can have it because there is a huge pool of stocks to choose for a small cap, so there would be no portfolio overlap. But same thing can't be done in the mid cap section because there are only 150 stock to choose, and there would be a huge portfolio overlap. So we can't estimate your returns because you have already gathered a 47 lakh of amount. So we can't be sure that how this compounding would work for you. But if you start investing now, and if you invest in that way, you will easily be able to generate somewhere around 16 to 17%, and that will fetch you around 17.24 crores after 15 years, which is I think quite huge. Your exact returns would be much higher than which is what I feel. So thanks for watching the video. This video is created for educational purposes. Mutual funds are subject to market risk, so it is advisable to consult your financial advisor before investing in mutual funds. Thanks for your patience.